Hello, ladies and gentlemen. This is supposed to be a sentiment analysis for the week of January 4th of 2026. Happy New Year. I say supposed to be because I'm not really sure where this is going to go. I spent all day yesterday running an analysis on the British pound Australian dollar for a short, similar to the previous analysis for the Euro USD and the British pound in the long direction. You're looking at the results of multiple take profit stop losses for roughly 699,000 candles. 18 years. I have never in my life had trading results for a backtest like these. This is unprecedented, and it's really making me question a lot of market variables. It's typical to have a market trend in a direction for a period of time. What's not typical is for the 1 minute market to be trending in a consistent profit basis across multiple take profits or stop losses. This is 25 different simulations. All of them, every one of them, profitable. And this is a single position take profit stop loss strategy. I'm not quite sure where to go with this, except that maybe I need to reevaluate this market entirely. The British pound Australian dollar is a market with very little volatility. It's got some decent liquidity, and I've traded this market in real life. Put some real money on it that I'm still holding 3 positions to. This research really does change my thinking on this market. I have verified these results and they are correct. So as we get into this, let's really look at this strange anomaly. And I really don't know what other words to put this in, because it is a strange anomaly. This is the short direction only. I took no trades in a long direction for this particular analysis. And we can see that the win-loss ratios are very visible, like with the 0.5% take profit and a 0.2% stop loss. Roughly 50 pips profit to 20 pips loss. It won 2011 trades while it lost 4,654 trades. And yet it still came out with a 10-cent profit. Now this is still just 1 unit, and 1 unit is roughly average price of $2. So if I had been compounding this, or if I multiplied in leverage, these values would be drastically higher. But the implications of this particular strategy, and it is still the very same support and resistance pullback strategy. I have not added the trend directional analysis yet. This is just what I have been using and presenting within the Discord server. This functionality is very unusual in that I have 18 years of history with every combination of take profit and stop loss being profitable. Even some of the more extremes, like a take profit of 1.5% versus a stop loss of lower. Let's see, where was it? It'd help if I find my screens here. There. Take profit of 1.5%, stop loss of 0.2%. The profit ratio on this is obscenely insane. The statistical probability of this is not only upside down, it shouldn't work, realistically speaking. This should be considered an outlier. But given how much of an outlier this entire system is, it should be reasonably difficult to repeat, which is why it is such a conundrum in terms of what this algorithm represents. Has the support resistance pullback metric proven so valid that it can produce these kind of results in the right market condition? Those are some of the kind of questions I am now facing as I continue to examine and analyze this particular situation. Let's go down to the most profitable. The most profitable is a 0.4% take profit with a 0.4% stop loss, and it received a $1.02 P&L. Now again, for a position size of an average of $2, I've made half of my total amount of position size in profit. That's not impressive for the trading, but if you extrapolate it, say by 100, a $200 position size will yield $100 in pure profit on a 1-to-1 reward to risk ratio. And this is the highest profitability of the entire chart, 1-to-1. This drastically and dynamically refactors the entire argument in a way that I really didn't anticipate. All of my research in terms of accumulation, DCA strategies, and even my own live trading supported more of a negative risk to reward versus an equal risk to reward. Even my GridBot, I have a 0.5% deviation per position to a 0.2% deviation per take profit. So even that is skewed based upon 2 years of research for Euro USD. So we have clear numerical and mathematical evidence that really does show just how dynamic market is and how that dynamic functionality plays a pivotal role in the outcome. Never in my life would I have ever expected one single pair to have 18 years of consistent profit for every single stop loss take profit combination I've tested. That is just mind-boggling, to be honest. But the numbers speak for themselves, and they are accurate. So where do we go from here? Well, it's clear that the Jackrabbit Technical Analysis Library has just earned itself a place. And it's clear where I need to focus my direction for the coming year, exploring more of these offsets to see just what else can be achieved. This is what a lot of the professional traders call a true edge. To be able to produce this level of consistency isn't just being in the right market at the right time. It's a framework of being able to come up with an algorithm that actually has real merit beyond just the typical numerical averages. It's a framework of a system that has somehow managed to find where the market actually lives in terms of its highs and lows. That's not to say this is going to work on every market, because as I have demonstrated with the long positions of Euro USD and the British Pound Australian Dollar, that is clearly not the case. But this does say that when conditions are such as what the British Pound Australian Dollar exhibit in a short market structure, it can do very well, and surprisingly well, to be honest. We have a classic situation of a paradox in the most literal context in terms of what we would think would be intuitive. For example, when I started this research, given what I had already done on Euro USD and British Pound, I expected similar results, just in the short direction. And even my experiments on the Euro USD in the short direction produced similar results to what I expected for the long direction. I had wins, I had losses. The combination was clear across the board that there was a strategic advantage with the negative reward to risk ratio. Now I'm going to have to go through and test more pairs to find out if there are any other pairs similar to the British pound Australian dollar that create this unique anomaly. Because I have questions, a lot of them right now, and I don't have answers that I can explain this situation. So whatever 25 times 699,000 candles is, that's the equivalent to what we're looking at here. That's a lot of trades. Anyways, share your thoughts. Let me know what you think. I'm not sure yet what I'm going to put in the body of this message. I'll probably go through with some of the normal stuff for HESA and whatnot, but I don't know. The week has been pretty much not that much of a change. There's been a few major emotional events, but the market itself really hasn't changed. It's been pretty quiet and pretty dull in terms of what you would expect for a holiday week. I'm going to wrap this up here before I start rambling too much, but leave me a comment, share your thoughts, let me know what you think. Most importantly, let me know the kind of value you would like to see for the next year. How well do these sentiment analysis work for you? What value have you gotten out of them? What needs to change? How can they be more valuable? This isn't about churning out useless information. This is about trying to give you something to help you make real money. Stability, consistency, sustainability. Those are my goals with these reports. And as far as the events of the week, well, Boston, Seattle, Portland, and parts of California all have rent crisis issues. The local governments are raising homeowners' taxes and driving businesses out. The economy for the United States is not in a good place, to be honest. It's in a very bad place, and a lot of people are hurting right now. But I don't believe that is just a U.S. problem when I read the international news as well. So looking forward for next week, there definitely needs to be a cautious approach taken. Spread out your risks, accumulation, or this type of a stop-loss situation, ATR, support and resistance, the usual metrics for making sure you can try to get the most information you can. Of course, the support server always has the various charts updated every 4 hours. That has really been a benefit in terms of some of my own trading, but share your thoughts there. How much benefit have you gotten out of that? At any rate, here's to a hopefully good start of the year. Thank you for watching.